Hello guys, uh, it's nice entering a beautiful Monday. Trading is nice and beautiful if you know what you are doing. If you don't know what you are doing, you are in deep problem and trouble. Now people talk about price, but they don't know really how price moves. It talks about the economy of this world, how the world works. Some people will make it in life, some will never make it in life. Some people, we have to go through the struggle of life or struggles of life to be to achieve the little they can achieve. But at the end of the day, knowledge and the mindset you bring to something and the determination matters a lot. Now, one thing that moves the market, two things that move the market are what? Premium and discount, and what? Fractality of price. All these pairs here, I can make money from them. There's nothing hard, but it took me years, 4 years to master it to the final stage. Correlation, volatility, fair value gap, other blocks. That just what facilitates the big machine. There's an algo running to facilitate liquidity for the big boys, whereby they move billions to do transaction, not move the market, to do transaction. The machine one is in London, one is in New York, and one is in Japan, Tokyo. All these are run by algos. All these are run by algos full time. There's nobody that is staying one place, pressing one or two buttons. It is run by algo, and algos, they have inputted all the inputables inside in order for them to make money. But from time to time, they tend to what? Move irrationally due to the appearance of news, just to upset or continue a prolonged move. So those are the times that there's an increase in volatility. Now all this price you see, price feed, is coming from the machine, giving each of them its price definition. Now, based on what I've explained from the beginning about the dollar index being bearish, that is my own analysis for the week. Now, when you understand this principle that dollar index is being bearish, you should understand that GDP USD should be what? Bullish. Euro USD should be bullish. Now, GJ should be bullish for Mondays. Should be bullish on Monday, possibly bullish today, but I'm not trading GJ. Now there's what they call volatility. Volatility comes in two forms. We have direct volatility and we have indirect volatility. Now direct volatility is when a specific pair like GDP USD and GDP JPY, GDP CAD, they are under the same GDP pair that is controlling all of them, has similar volatility. Now, those volatility, you see, are in such a way they correlate with each other. But from time to time, you might see, either during the news or a specific day, you might see the price move against each other just to what facilitate liquidity. Now, volatility in a sense, you might have two markets moving in tandem with each other. They are moving together, but the ratio of movement are different. GU may be running at 100,000 km per hour. GG will be running at 200,000 km per hour for every buy signal that comes in, thereby making the market at the end of the week inversely proportional to each other. Does not mean they are not correlating. The volatility, it was the volatility that differentiated them. Now, looking at price now, the way it is being formed, looking at we're in an upward structure. Now, the mode of delivery should be upward. Now, in my last video, I said about you don't need to wait for a bearish move. Sorry, I made a mistake. You don't need to wait for a bullish signal, because I told you that I'm bullish for the week. When price retraces down into this daily order block, the next drawn liquidity should be what? Bullish. Now you see price going to previous day's high. Does not mean I'm right, but I have a risk management in place and a risk to reward ratio in place. But based on fractality of price, which I said earlier, with premium and discount, makes price tends to move. You understand? That is what moves price, premium and discount. Premium and discount like any other market, because you have to understand that the banks does these two things: sell high and buy low. And if they are buying at a high price, either they are trapping liquidity based on other time frame. Now my bias for the week for the dollar index is what? Bearish. I'm looking for what? Bullish on the what? On the British pounds USD, because they are inversely proportional. So I don't need to stress myself. But let's go further to price. Let's go further on price, sorry. Now when you look at GU, it's bullish. Euro USD, bullish. Now gold, we might see gold move to the 3,000 level because it tapped into the daily order block, the daily fair value gap for a continuation move up. Possibly we might see it move up. Now we have GJ. Now this is where I'm saying things that I am the one, is in my work, it's me that discovered it. I'm bringing it out. I went beyond what anybody can think or anybody can do on this planet Earth. I went above and beyond. Now, looking at price as its own, as it's appearing right now, you knowing that, okay, GU is bullish. I told you that GDP pairs, they work in the same correlation and movement from time to time, but not all the time. They work in tandemness with direct volatility or indirect volatility or indirect correlation, in order, especially you see them on the daily time frame, in order to induce pools of liquidity, create liquidity on the 4 hours, 1 hour, 2 hours, 8 hours, in order for them to have liquidity to facilitate. So what is just there is that this game is a zero-sum game. You have to be able to read price at a high level and high scale. Now, price between GU and GG, GU and GJ works with the same volatility, but from time to time they change their own volatility. The algo changes the volatility of these two pairs, but they are moving at a correlated pattern. But sometimes you will see that you have indirect correlation. But when you see volatility come in place, volatility has a way of manipulating price. Now you see, if you look at the GJ on the weekly time frame, is seeking bearish move. Now GU is seeking bullish move. Both of them are working in the same volatility, but not working in the same ratio distance they are supposed to work with. Because why? Now, if GU is working at a ratio of what? 20 to 30,000 kilometers per hour, GJ will working at maybe possibly if the direction is in tandem with GDP USD. When GDP USD is moving at 20,000 kilometers per hour, GJ will move at 100,000 kilometers per hour. Reason being to go back and offset existing buy side liquidity for them to what? Trap them and continue in the reverse portion or version. Now, but GJ, my analysis for the week is bearish. This is what is going to happen. You will see these two things, or you see one of them. Now you see GJ have gone down to a short-term discount. You will see that it will come back you have gone down to what? A possible long-term discount. You will see it will come back to a short-term premium in line with the GBP USD, but won't move much compared to GDP USD because it is not in tandem for the week with GDP USD, though they are what? Correlated in a way, but the volatility won't let it. That is when you will see this price moving at the same volatility, but at the end of the day you will see different results during the week, because when volatility comes in, when it's in line with GU, it moves, either it consolidates or it moves a little bit against to premium. But if GU is moving bearish, GDP JPY will move with maximum volatility, because it has a volatility ratio of moving at a higher price because it's seeking bearish momentum for the week. So thereby you will see the weekly will close bearish, but GU will close bullish. That is how it works. If you don't understand it, you leave it and watch the video over again. Now we have GDP Aussie. GDP Aussie for me is bullish for the week. Now GDP card is a very nice example. GDP card is a very nice example. If you understand the daily time frame now, you understand these equal lows being formed on GDP card on the daily time frame, you or anybody should expect that this up close was just to bite back or move back, anyone you can call it, into what? Existing what? Premium, before moving towards a lower what? Discount, thereby allowing smart money to what? To sell at a better price. They are not moving the market, but people that understand the market have the ability to sell at a better price. Now we have possibly liquidity what? Coming down to these lows. Coming down to these lows for a continuation move down. Now if you look at the weekly time frame, we have this fair value gap. I'm anticipating to be an inversion of fair value gap, a way of what? Supporting for a continuation move down back to the existing bullish order block. This should be the drawn liquidity right here. Now the weekly on the dollar USD card should be bearish. Now when you look at the dollar index, should be bearish. Now USD JPY should be bearish. CAD JPY should be bearish. Now so all what I'm saying in a summary is that I'm looking forward to a bullish buy today, which is Monday, on GDP USD. 1% during London and 1% during New York. Simple as ABC. And your time is within 8 a.m. to what? 12 8 a.m. to what? 11 a.m. Then the new year should be 2 p.m. to what? 4 p.m. Thank you. So it's just a way to give guidelines to traders, upcoming traders, because let them not go through the years I spent in learning it. Over time I'll be posting I just urge you all, please try and subscribe to my channel. Now USDJPY, there's not too much talk about it. If I click on it, you'll be able to see. You don't need to disturb yourself too much. It's not hard to understand where it's going. Where it's going is this. See where it's going here? You see this fair value gap? From there, the liquidity on this low now, someone is buying, believing it's a reverse. I don't even know who is buying. It's only God that can help us. But I'm anticipating, possibly the person might be right, but I want to see price coming down to this what? Fair value gap here as my drawn liquidity, just to move down to this at least 14726. So what you should be anticipating, let's look at the daily time frame. So the daily time frame now, you can be bearish, it's still okay. If I were to trade, I'll be bearish for this week. I may take the sales from today. But the only thing is that you have to be very careful, because you are in a deep discount. You might want to retrace back a little bit in order to attract pools of liquidity. You know, we're in a previous low, but I want to see aggressive move, claim this liquidity for a continuation move down, for a nice move down on USDJPY. So to enjoy yourself this week, stick to GU. Then if you want to try your luck, you stick to USDJPY and you rest. You want to swing GU. You want to swing USDJPY. You want to swing. Another opportunity is on Aussie USD also. So on Aussie USD also. Very beautiful buy for this pair. Though I want to say this. I'm not saying it based on full confidence, but based on my own analysis, because this market has a way of shocking people. But based on my own analysis, I want price to come to this previous high here, because there are pools of liquidity resting above this size. So thank you.